Welcome back, everybody. Today you're going to learn how to scalp the 5-minute chart. If you're new to this channel, my name's John and this is Supermarket FX. Here we talk about ways to simplify your trading and free you from the belief that trading can't be done. Now today you're going to learn a game-changing trading strategy, and I'm going to try to show this to you in 10 minutes. I'll run through a bunch of examples, and I believe once you see this will be something that you can definitely add to your arsenal. What we're doing here is we can clearly see that price is moving up, then started moving sideways, and at this point started changing direction. Now what you're doing is you're looking for an opportunity, and we're going to be targeting a specific area. This doesn't work every time, but you'll see that it works often enough. Now what we're looking at here is price has changed direction. Now we're trying to identify where it's going to come back to. Well, with this particular strategy, what we want to do is we're looking for the voids, and you've heard me talk about voids in some earlier videos that I've done. We know that price often changes direction in these areas. It doesn't mean that it will, but these are one of the areas that we look for when looking to get in on a trade. So we're just looking right now at the 5-minute chart. We're not paying attention to any other time frame. And you can see the void right here. You don't see it anywhere else above. This is the highest one at this point. So this is what we're targeting. And if you run this across, and we only started looking at this after price decided to change direction, and now we're looking for an opportunity to get in on the trade. And you can see price is now deciding to come back, and what you're doing is looking for the best time to get in on the trade. And at this point, this is where your opportunity is. So what you would be doing is getting in on the close of the candle. And the reason for this, price came into the area, it touched into it, and some may want to get in right away, but we don't know if that candle's going to shoot right through. So we're waiting for it to almost close, and if it looks like it's respecting the area, we're getting in on the trade. If we run this further across, you can see that it actually was respecting an area. It was respecting this area of structure right here. What we do is, because we've seen that it can potentially change direction at this point, we're entering in on the trade, and your stop loss, you can put that just above the previous structure here and target the low. And it's entirely up to you if you want to target the wick, but I usually aim for the body. And then if you play this one out, you can see this one did work out. You're just simply watching how price is moving. So price was going up to change direction. You're looking for the highest point where there is a void. And when price comes up to that area, if it respects it, you're getting in on the trade near the close of the candle, targeting the low. And we'll take a look at another example now. Okay, so what we see here is price is moving up, then price changed direction, broke structure, indicating that price was going down. And what we're watching for now is a possible entry point to continue in a bearish direction. And when you look at this, you can see right here, at this point, running it across, there was a void there, and you're watching to see if price will come back into that area. And if it does, you're going to enter in on the trade if it respects the area. What it did is it did come up, touched into the area slightly, barely went into it, but it respected the area, and you're going to enter in on the trade at that point. Your stop loss just above and targeting the low. Targeting the low. Actually, you have two different spots you can target here. You can target this one here, which is only a 1.2, so I would try to go for something a little bit more. You could aim for this one. You can also see another low here, Aim for that one if you want, but let's just say we went for this one. And you can see that it bounced around a couple times and it still came up, testing it, still respecting the area. And if it continued to push up, you could decide if you want to close out the trade before it continued any further or try to hold on to it. It's entirely up to you. But price bounces around and eventually it does hit it. But you can see that's, again, same thing. Price moving up, strong intention to the downside. We're looking for a void near the top. Price comes up to it. It's showing that it has no intention of pushing any further up. You're getting in on the trade, targeting a low. You have to decide which low, and you may adjust your stop loss depending on what type of risk you want. Now let's go take a look at another trade. Now this one here, it's slightly different, but the idea is still the same. Price was pushing up, and that's all we know right now. It was making higher highs and higher lows. And you can see price is doing a pullback, but now we see something here. We see price broke below this area, indicating there may be a shift, there may be a change in direction. We don't know if it's just going to continue going back up, but this is a clue that it may change direction. And then when we look at this further, you can see price came back up, and when you take a closer look here, you can see that there was a void right here. Price came up into it, respected it, and some people might consider this an opportunity to get in on the trade to continue going bullish. But we see that it's telling us that price may go down. We've seen price come up, back up into a voided area. It's not pushing past it yet. And at that point, you would get in on the trade on the close of the candle. Stop loss just above. And you could target the low here, or you can target another low further down. And if we see how this plays out, price does hit it. Same idea as all the other ones, but you didn't have a big push past the structure, but you did have quite a bit of a move here. And this was the only clue that you had that price was going to change direction. I'm going to give you one more example, just so you guys know what I'm talking about here. And if you like this video, hit the like, subscribe, and share so YouTube knows that you like this video, and it keeps me making more great content for you guys. Now let's get into the last example. Okay, so for this trade, what do we see? Price was going down. Price started moving sideways. Looked like it wasn't going any further. And then price broke above, showing that its intention may be to go higher. That's all we know at this point. And when you're looking at this, we can see that price was coming back down, tested the area, and the area that we're showing here, if you know what I'm pointing out here, there was a void right there. That's the area that we're looking at, the furthest one away. Price comes back into it. A lot of people might have been nervous if they were getting in on the trade. Like that candle at one time was full all the way down there, so you wouldn't know what to expect. You might think that it may continue further down, but we're waiting to see what it's going to do. It came into the area, didn't close past it, respected that area, and at that point, that's a pretty good clue that price may continue going up. We're putting the stop loss just below, and you're aiming for the high here, or you can aim for another target. And when you watch this play out, this one didn't take very long, but you can see that's all it was. And I hope this one's sinking in for you guys. I think this is a fairly effective strategy, and you can tweak this and try to make it better. Try to improve it as much as you can. If you have any questions about this, or if there's any other strategies you'd like to tell me about, leave me a comment. I'd love to hear about them. And until next time, bye for now.